Oil extended gains, eventually reaching $85 per barrel. Thus, a correction can be considered complete. Currently, the market is standing still in search of new factors that could have an impact on its direction. By and large, the main driving force for the new future will be the Fed's further monetary policy tightening, and this factor will put permanent pressure on all trading instruments, including oil prices. So, any factors or events that should contribute to the asset's gains will have only a limited and, most importantly, short-lived effect. Brent crude oil futures spared most of the early losses incurred between January 27 and February 3. The volume of long positions increased, and thus enabling the price to consolidate above the 85 mark. The benchmark will edge higher if it overcomes the 86.50 level. In this case, the price may well hit a new local high. Notably, such a sharp rebound may push the asset into overbought territory. Thus, while entering the market with the long positions, one should bear in mind that a technical pullback is not excluded. Meanwhile, gold has not yet been able to enter a much-needed correction. The point is that the yellow metal is heavily dependent on the monetary policy of major central banks due to its safe haven status. So the most likely scenario suggests a gradual decline in the gold prices. However, the market needs to address the imbalance, so a local correction is necessary. And until it happens, the metal's downside potential will remain limited. Gold futures have been trading sideways for the third day in a row, with the quote trying to gain upside momentum. If the price returns above $1,890, the volume of long positions will increase. In this case, the asset will begin to recover after steep losses in recent sessions. The ruble keeps losing ground, and the dollar-ruble pair extended its bull run and hit a new high. The quote is currently moving at levels last seen in late April, which signals a continued uptrend. This move indicates that market sentiment remains bullish. If the quote consolidates above the 73 mark on the daily chart, the greenback will strengthen further. This scenario is quite logical. The thing is, Russia's finance ministry has been considering increasing its sales of a foreign currency since the very beginning of this year. And yesterday, the Ministry of Finance said it would nearly triple its June sales in February from the previous months. The amount is not so significant, only 160 billion rubles. However, this statement convinced the investors that the intervention volume would only increase, and this somewhat changed the market situation. Therefore, in the short term, the ruble will probably remain under pressure. Also, it's worth paying attention to the statements made by the government at the end of last year. According to them, the optional exchange rate is 75 rubles per dollar. Thus, it can be assumed that the Ministry of Finance will regularly make statements about massive currency sales until this level is achieved. Fortunately, Russia's foreign currency reserves are ample as the trade supply has reached a historical high, so the Ministry of Finance has every opportunity to influence the ruble's exchange rate. And that's all for now. We wish you profitable deals. See our channel with a new video in a couple of hours.